discover its new market, right? Because I have probably last 10 years experience in finance. I used to be executive director of the Warsaw Stock Exchange office in Ukraine. I was dealing with IPO companies, and we saw so many opportunities, like wonderful opportunities in the private sector, like growth companies, agriculture, tech, mining, and many of them who cannot really get the finance on a public market, because public market is very compliant, very regulated, and very much dependent on country risks, for example, right? So it's not always good to be a public company, because you are then dependent on many things which are not related directly to your company. And that's where we had this idea of having a proper market for private companies with a secondary trading. So I want to understand this market. Where is this niche of companies which are doing a crowdfunding, or companies which are doing the IPOs? So between them, there are companies which are on a growth stage, right? And the question is actually, does those companies have enough power and enough visibility on the market to be traded on the secondary? Does investors want those companies and those securities to be sold on the secondary market without those companies to go public? So my question to Nick and to Jeffrey, what do you think about this? Is it viable to have a secondary market for private companies?
So I'll just explain what I do. So I've been in crypto since the beginning. I've been in technology since 1973. I own 2 exchanges. I own the primary issuance exchange. I run some of the world's biggest investor networks. And we are dealing with enormous capital pools that want to come into this space. Digital assets, whatever you want to call them. For me, what we're doing is thinking about effectively digitizing or tokenizing conventional instruments. I mean, that's really the heart of it, and all the advantages that Highcliffe do in terms of, speeding up that process. Now, we were in Monaco last week with $4 trillion of private wealth, and we take on loads of projects to get them funded. They're all Series A upwards. But we actually don't issue security tokens at this stage, because like you guys, we're going through regulation in the US, and we're going through regulation in Malta, which is a bit of a joke, frankly. MiFID MTF, nonsense, frankly. And in the US, we're in Wyoming, which is, I drive a truck and I like guns, so I get on well in life. So, what we're focusing on is not the primary market in terms of tier 1 stuff. We're looking at new emerging private companies that want to digitize their value in a sense, and then we match that with capital. But we don't yet do security tokens because 2 factors. First of all, there isn't a regulatory framework and there isn't enough infrastructure there yet. And number 2 is there's no liquidity. There's actually 0 liquidity right now. And the institutional capital won't come in until they see a product that they can see with the wrappers and what this gentleman was saying. They want to see something they recognise. And number 2, they won't come into a market unless they know they can get out. So that's my view.
Yeah, I hear you there. I mean, I like the fact that we're talking alternative investments. The alternative marketplace is 900 trillion, right? Derivatives, real estate, alt debt, all that stuff. It's a huge marketplace. But that, as I think, is where we're going to have to address, because it's alternative investments, and currently there are virtually no marketplaces for alternatives, right? Now, if you want to buy digitally focused companies, you go on NASDAQ, right? That's a marketplace for technology type companies, right? You've got to have a certain market cap, maybe 15, 20 million in market cap. You've got to be SEC regulated. And then they have a whole marketplace. You can buy technology companies up there. Then you have New York Stock Exchange, which has a similar mandate, not so much tech focused, but there's this was a marketplace. You can buy companies. It's just not very big. It's only a couple hundred trillion, I think, if that. But there is really no place where you can go and buy alternative investments, whether they're growth stage, mature stage, or anything else. There's a lot of, if I'm not mistaken, and I want your comments, I mean, there's little marketplaces like HSBC, ultra high net worth wealth. They have a little Excel spreadsheet where they sell alternatives to their wealth advisors. But there really isn't a marketplace like there is for public securities for them. None.
And there is the issue. So I'm going to put my libertarian hat on now and say that the current capital markets is an exclusive club and it discriminates. So if we want to democratise capital and give the small guys, the entrepreneurs, the small businesses a chance, then they can't play in the traditional capital markets. It's too expensive. The entry costs are too high, the fees are too high, and it just doesn't work. So, what we're focusing on is creating a digital capital markets for the small guy, for the SME, that can get access to capital. The banks are not lending, the cost of capital is too high, VCs demand too much flesh for their money. The crowdfunding platforms get you to a starting point, but then where do you go after that? There's no liquidity on any of the crowdfunding platforms. So you've got an entrepreneur who wants to go to phase 2. You've got angel investors on these platforms that can't sell out, they can't get out of the deal. So the problem's not at the top end, the problem is at the SME small end. And that's the big attraction of digitising a range of different stores of value and try and open it up. Now, we do have to focus on accredited investors, sophisticated investors, and so on. And, there is a level of, finding out who people are. But let's be clear here. Crypto capital markets, the crypto exchanges, most of them are scams. Okay, so forget it. Binance scam, Huobi scam. Try and do fit and proper on the owners of those exchanges. You can't. You can't even find out whether they're incorporated, and they list shitcoins. And there is the problem. Confidence. The regulators looking at this and looking at us, and what we're trying to do is do it correctly.
And that's why they won't let an ETF in crypto.
Nick, that's a bold statement coming from you. You like shitcoin fucking deliver. What happened with 21 million?
Well, it's filming actually next month.
And didn't you embezzle quite a bit of money into you knew what you're doing and you didn't give an introduction with, you didn't put 21 million in?
Sorry, who are you? By the way, you're accusing me of embezzling money, are you?
Well, it's a fact.
It's a fact, is it? Okay.
Yeah.
Well, that's interesting.
It's over my
You're
head.
talking about other people being scammed. I think you're one of the biggest scammers.
Am I one of the biggest scammers, am
I think so, yeah.
I? And who are you, by the way?
It doesn't matter.
There you go. So you make accusations, but you won't tell anyone who your name is.
No.
Okay. All right. Well, I'll hand it back to you. You're the host. You deal with that.
So we all
Well,
just, I think we will move this forward.
Let's go back to scandal. No, let's not go back there. I've got a comment on, I've got a comment on the marketplace side. Now, look, I tend to disagree on the democratization because I'm concerned about investor protections, and I think that the regulation is there for a reason. There's a lot of gating involved with what investors can do, and there's a lot of reporting required for companies, and it's there for a reason, and it's there to protect investors. So I'm very much in favor of that. I also believe that in the private alternative marketplace, there's a lot of money on the sidelines because of lack of visibility of opportunity. So I'm a little more interested in building a mirror marketplace that mirrors the public markets in a sense, but it's for alternative investments. And it is relatively elite, and it does have gating, and it has reporting, and it's required for investment advisors or accredited investors. But it is a little bit of an elitist thing, and it's not just it's unlike cryptocurrencies where your grandmother can buy it, whether she can afford it or not, right? But I'm really in favor of having more visibility and a real marketplace for valuable alternatives where investment advisors can allocate their clients' money to it. or high net worth family offices can go to a safe place where there's good counterparty risk on custodianship, and the companies are vetted by FCA licensed investment banks and things like that, where you can build a confident marketplace of alternatives. That's my perspective.
I actually want to ask Philip, like from your legal perspective, right? Because you have experience with compliance law. So do you think existing regulation is enough for private securities to be issued and traded, or there should be some additional legislation in place? Because now we have a blockchain where securities will be issued and traded.
At the moment, I think the regulatory framework needs to catch up. I do think it's structured in a way at the moment that it's like putting a circular peg into a square hole. It works, but it doesn't quite work. Similarly, when trading in carbon credits and things like that came in 15, 20 years ago, the framework was there, but it didn't quite work. I do think the FCA have been quite proactive in terms of engaging with prospective participants in financial services, to engage with them, to evolve the framework. But no, I think there is some way to go, particularly, and the chap at the back mentioned appropriateness and things like that. It really depends on who the eventual investors within this market space are. There are huge limitations in terms of selling private securities to Joe Public. If it is as this particular market evolves, I think some work will have to be done in terms of how private securities can be sold to retail investors, etc.
So the requirements that we're going through in Malta for the MiFID MTF is it's a secondary trading environment. So primary issuance in one sense is quite straightforward, because you create the Genesis contract, you create the digital asset, and you go through a filter of identifying who buys that asset day one. You roll that forward to secondary trading. What Malta regulator wants to know is who currently owns the asset at that moment in time. So as they change hands, you have to lock down the owner of that asset. So therefore the KYC has to be ported to that asset. And you're going to do that a lot of times. But they also want assurance that there is a decent registry function. And we talked about custody earlier. And the problem is the custodians are not really understanding the principles of moving digital and crypto assets on and off exchange. So we don't hold assets on exchange because we can't insure them. We hold a minimal inventory so we can close out the trades, and we are very dependent on the custodian settling and looking after us in a sense. So there's a real separation between the secondary trading and the custodianship. Now I met with Societe Generale the other day, and they're all over this. They did the first big bank to issue a digital bond, and they're very, very proactive. But we need some global custodians. We've got crypto custodians in the US. We have to use BitGo because they're quite useful. And we use our bank in the US for fiat custody. Because as an exchange, we have to custody both crypto and the fiat at the same time. So the custody and some of the surrounding, what Jeffrey was saying, is some of the other components around insurance, counterparty risk, and custody, they're not really there yet. It's emerging, and you're probably experiencing it. But the regulator demands it. And that's why we're not active yet in secondary trading, because until we get MTF and we can demonstrate we've got this infrastructure, then we can't go near it.
I was going to say, one of this disclaimer, one of our clients is Coiny, right? And they're just laser focused on institutional grade crypto or digital custodianship. That's their focus. Because they recognize it's a problem, and good to hear what you say, because I believe it too. There's a kind of a problem that needs a solution in the marketplace. Yeah. So then they're laser focused on solving that problem. It seems like people aren't thinking about it much, except for guys like you, but they're solving that. So anyway, I'm happy to mention.
Disagree.
I think it's important to understand that there is already a bunch of regulation existing for primary and separately for secondary market, right? So anyway, everyone who is going to trade it on primary or secondary market need to comply with this regulation. And if for some reason regulators would think that digitalization lift those requirements, so I believe it will happen very soon, right? So maybe if digitalization will happen to private securities, maybe also requirements will be lifted. I don't want to see that every offering will be accompanied with audit of a company, right? Because it's not really makes sense for private companies to do audit. But still, we may see some innovation and more requirements coming with legislation as the digitalization will proceed. I want to ask still more, because we are very deep in regulation. Every of us on our side know very well the regulation, right? So I want to understand better as a market. When do you think a company, private company, need to get issue their securities in a digitalized form and start them, make them traded, so lead them to exchange? As a private company, what stage is the best to do it?
Well, look, all our clients, we issue both analog and then the subscription agreements are all digital friendly. We can flip the switch and go digital. We try to futurize the offering, right? Because most securities are bought analog now, and they'll continue to be for some time.
But stage of the company, is it early stages or is it like already like mature companies, pre-IPO?
It's not expensive to have the option in the subscription document, so we usually growth stage B rounds is where we function, primarily $5 million minimum raise, right? Maybe $20 million valuation is kind of where we're at. But we always, it's within the reg tech part of it, in the offering documents, we have a few pieces in there that allows for digitization of their offering. And there's a lot of things you have to consider on that, like voting rights. You can have multi-tier voting rights. Some shares may freely trade. You may not want the voting rights to go with those trades because of the valuation might be low and your competitor may buy your company, so you may have different preferential voting rights. You want to put that in there. And so, but we always have the option, but primarily the securities are all analog.
So yeah, I mean, we take a slightly different view, purely because the market's not quite there yet. But we tend to focus on private placements, convertible notes initially to get the projects pre-funded. We then think about what are the engineering requirements from a smart contract point of view in terms of when are you going to issue that digital asset. What are the rules, as you say, what are the rights and entitlements of the holder of that asset, and then how they're going to be secondly traded. And there's a lot of challenges with some of the exchanges that are out there. Is, for example, they're built on Ethereum, which is a ledger-based protocol, which makes it very difficult to track and trace the asset. So this is why you guys probably don't use Ethereum. So so there's some infrastructure there emerging, but it's actually flawed in a sense. And so we're maneuvering around it to try and bring investors in, but it's very traditional at the moment. It's convertible notes with the option for the owner of that note to buy a digital asset as a security token when and if as a primary issue you decide to do that.
Yeah, I generally agree.
Well, you got to get the deal done, right?
Yeah.
You got to get it done. People need to raise money. People need to make investments. They're a little leery of the digital, so get it done analog. But put the option in there for when the market's ready. Flip the switch.
So deal and of course quality for a company always come in the first place. And digitalization is just a bonus which you get for future liquidity of the asset. So I will open now the mic for questions. If you left some, because I know a lot of questions have been passed already before the panel. So any questions in the audience? Okay, so a gentleman on the third on the course.
Hi, so you've spoken a lot about digitalized securities. How do you actually digitalize them? So do you have a nominee structure, for example, or are they instruments representing certain securities? Like what are they actually?
My preference is derivatives.
So you have them all as futures,
I would
options?
say all of them. My preference, I believe, derivatives represents the cumulative derivatives in the financial marketplace is large. The derivatives at 500 trillion is larger than the sum total of all other.
Yeah, 100%. But so I guess this is a question for Philip. So you have a company that wants to raise money. What do they issue? Do they issue shares? If so, are they held by a nominee that then controls the ledger, or what is the thing that's being issued? Because you can't. There is not a regulatory designation of a digitized security. It has to be digitalized in some way from an existing form of security, right?
Absolutely. So it's a digitalised representation of a security, and the digitalised representation of that security then goes in your wallet, yeah, basically. So in terms of how that's held, that's
But it, yeah, but
And
it's
The
there.
FCA actually has a pigeonhole for what is digitalized security. It's a non-readily realizable asset. Sorry, non-readily realizable security. So they do have some regulation around that.
And that was the crowdfunding designation, right? The NRRX, yeah. Do you have a custodian who holds all the shares and then updates the ledger, or do you have to tell Companies House every time there's a sale of a share?
Not every,
you go.
not every time. So actually, by requirements of Company House, you do it, I believe, once per year. This confirmation statement. During the year, company keeps the register of its shareholders.
Who does,
all
sorry?
the transfers.
Who holds the
Company.
register?
The company
The company itself.
yeah.
So you facilitate the company itself
yes.
holding,
Exactly.
and all of the shares are held by individual people, not by a nominee or not through a custodian.
Not by individual people. So by on their corporate or individual securities accounts.
So the digitization is you facilitating telling Companies House who owns what, and they're digitized in your record of who owns what.
Yes.
That's the point.
Now, see, my preference is a derivative, is a street name and a derivative. That doesn't mean it's correct, nor does it mean the marketplace should be that, but my preference for easy reporting and things of that nature, rather than having a lot of shareholders in a lot of small companies, I like to have an SPV or a nominee that owns the shares, and you trade derivatives, economic interest in the shares, and you don't have voting right problems.
Any further question? Yeah, Andrew.
One question. We know that sort of secondary market liquidity and therefore trading on MTF is quite important. But to trade a digital security on an MTF, I believe you need a CSD, or Central Security Depository in Europe. Where do you see those fitting in? Is that anything mentioned around that sort of base layer from a regulatory perspective?
Sorry.
I can answer this question. So by 2023, you don't necessarily need to have CREST CSD as a settlement system. So actually, trading platforms can execute trades with use of other technological means to do the settlement of such securities. And there is no requirement for a company to do PLC company, public company in order to get traded. So there is changes to Central Securities Regulation from 2023, which is saying that CSDs need to be a counterparty which is doing the issuance, right? And I think it's a big challenge for a market. We have solutions for this. It depends on what solutions are relying as other members of the market, but I think it's a big challenge, and everyone needs to approach this correctly.
Can it, please?
Oh, hi. I was just thinking that Ethereum is basically the way forward for digital currency?
I can say.
No, I can actually explain my point.
Yeah.
I think Ethereum is the way forward. Bitcoin is, as it is, not very flexible. Ethereum requires much more acknowledgement of regulation and all of that, but also it's much more stable. So we have a way of trading Ethereum smart contracts for banks. I'm particularly interested in smart contracts for banking. There's no way Bitcoin can accomplish any of that. So I think Ethereum is the way forward. What do anyone of the panel have to say about that? Please.
Okay. So Ethereum is an entirely different protocol to Bitcoin.
Yeah.
Although the genesis was the same place. Ethereum is really engineered for transaction processing and behaves like a big computer, basically. And it works on a completely different principle from Bitcoin. Bitcoin was designed as a payment rail, and it's now surpassed that and become a store of value, an asset class independently, the best performing of all time, by the way. But Ethereum was engineered for an entirely different purpose, and the Ethereum Ether token wasn't designed as a currency. But it does have a good smart contract platform, as you say, you can build applications on it, but in terms of trading, it's not a good choice, because there's no track and traceability on the Ethereum protocol.
Yeah, I mean, like in San Francisco, everybody's writing their deals on Ethereum.
Not on a public Ethereum. It's not really a trusted network to issue securities, because security is a legal document which is confirming the ownership in dematerialized form. So public Ethereum is not good for this. It doesn't fit at all. And for this reason, we believe that some.
But you can use Quorum, correct? Quorum.
Yeah, you can use it as long.
What do you prefer, Jeffrey? Not Quorum. I said Quorum. Obviously Quorum is the private Ethereum, out of the Ethereum brought by the likes of JP Morgan and so.
As long as it permission, as long as it good enough as technology and it's really check who has ability to do issuance of this on this blockchain. So I believe that it might be a suitable solution, right? So it's just a matter who is in charge and who is a part of this.
And I think Ethereum has a range of possibilities. It's not just tokens, coin specific to a single bank. You can actually administer cryptocurrency in Ethereum, which will not only provide you with currency relationships and transaction details. For example, for the bank I used to work for, then I could automate the loan payments for a 90 billion corporate loan portfolio. I could automate all the payments and get rid of all this money processing and all this legal stuff and everything. They just had to pay in crypto for their loans. And then it would have worked brilliantly. And it could still work brilliantly, except that people are kind of confused about what Bitcoin and cryptocurrency is about. But basically, I think
What's the question?
Yeah,
well,
let's have these comments in couloirs because we will have a networking over there.
Sure.
I value all of your comments, it's very important. Just want to get on questions, right? Questions is open.
general question. So, with you now, we come from, like the more